Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Trade-In TV. This is your stage to shine.
Hello, good morning, everyone. Good morning, Arif. Good morning, Meza. Good morning, Rohan. Okay, so good morning, everyone, and welcome to a new episode of Chat and Chart. This is the London session open, and this is your host, Saif Qaddoura. I hope you had a great weekend, and I hope you're as ready as I am for trading this week. We have some major stuff coming up this week. Of course, most importantly, is going to be the Fed interest rate decision, the FOMC meeting happening on 28th and 29th. So it starts tomorrow and ends after tomorrow on Wednesday. And then after the meeting, we have the Fed interest rate decision, in which they're going to decide if they're going to hike rates, cut rates, or keep them unchanged. But for me, I am pretty sure, and markets are pricing in no change at this meeting. But also, markets are pricing in a 74, 75, I'm not sure, but in the 70s percent chance of a rate hike before the end of this year. So we'll have to wait and see how the tone of Kevin Walsh is going to be this meeting. This is officially his second FOMC meeting, so let's wait and see. But for now, let's do the usual. Let's go through the economic calendar day by day, see what we have, and then move to the charts and try to align both with what we have on the charts. All right, let's go. We start with Monday. We have the durable goods orders from the US. They're expected to improve after a very big drop last reading or last month of minus 4.5%. The forecast is 1.6%. This is positive for the dollar. So if it comes in anything above zero, it's going to be good because it indicates growth in durable goods orders. Okay, so that's it for Monday. This is going to be 4:30 p.m. Dubai time. Then we move to Tuesday, which is July 28th. Tomorrow we have only the consumer confidence numbers, which is expected to come in slightly higher than the previous at 92.1 in comparison to 91.2. So no big deal. It wouldn't be like very high impact, so to speak. So the day that everyone's waiting this week is this day, which is Wednesday, July 29th. Okay, so we have crude oil inventories, of course. Last week we had a build. That's the first build in 3 weeks. Let's see how this week looks like, if the supply chain disruptions are actually under control, or are they like dominating the inventories. We're going to see this week. But then to the main event, which is the Fed interest rate decision. The previous is 3.75 to 4%. That's the range. And sorry, no, it was 3.5% to 3.75%. That's the target range. The forecast is 3.75, which means no change. But that's not important. We already know this outcome. Then we have the FOMC statement that Kevin Walsh is going to read during the press conference, which is the most important part of the whole day. So the FOMC press conference will have the highest impact of the week, if not the month, on markets, because that dictates how markets navigate the monetary policy expectations and how they navigate trading the US dollar itself. So if the tone was hawkish, you're going to see positivity on the US dollar and negativity on everything else. But if it comes in, if the tone turns out to be dovish, then that's negative for the dollar, and we're going to see everything else gain steam. But looking back at the overall situation in the Middle East and looking back at everything happening around us, I believe he's going to be hawkish, because even when the CPI and PPI prints came out, Kevin Walsh was had one comment, like, it's too early to celebrate. it's too early to actually declare victory on inflation, because that's just 1 month of data. So, in my opinion, I think he's going to be hawkish, and we're going to see a continuation of the strength in USD and a weakness in everything else. But that's just speculation. We don't know. We need to wait and see. Okay, Yahya, good morning. Tayu, good morning. What of UK? What do you mean? Insider trading bill passed in Congress, US. Yes. Yeah, there was like an interesting stat about this Mesa. Like, during the first term of Trump, his first term, he, like, I don't know, he made what, like 640, 650 trades during his first term as president. Then Biden took over, obviously. Biden took 13 trades. And then now, in this term, in his second term as US president, Trump made over 20,000 trades since he took office. So, yeah, it's about time to pass a bill of about insider trading in the US Congress. So, yeah, that's it for Wednesday. That's going to be the most important day. But I want you to focus on the press conference and what Kevin Walsh says. Not only what he says, the tone of how he says it. All right? Because you can say two different, like, you can say the same thing in two different ways. So the markets care about how he said it. Is he hawkish? Is he concerned about inflation? So on and so on. Okay, then we have Thursday, the busiest day. It's important. I'm not gonna lie. This is important, but I don't believe it's going to be more important than Wednesday. So first, we start the day. We kick off the day with German GDP, the quarterly reading, and that's just a flash estimate. It's not the final number. The previous was 0.3%. The forecast is 0.1%. So anything above 0.1% is going to be positive for the euro, and anything below that, it's going to be negative for the euro, because it shows that the German economy is not growing, which is the most important economy in the eurozone. Next, we have the Bank of England interest rate decision, also expected to stay unchanged at 3.75%. This is not going to change much. Then we have the German CPI, the inflation number. It's expected to be very much higher than the previous reading. The previous reading was minus 0.3%, but like the reading for June. But remember, in June, we had the ceasefire and we had the memorandum of agreement between, or memorandum of understanding between the US and Iran, and they were actually like waiving some of the sanctions on Iran to export oil. So they filled up all the inventories, and the global economy took a breather from this tight supply conditions. Okay. And obviously, here we're talking about oil supplies. Okay. So for July, this all changed. And like the German CPI expectations are showing um, a huge increase, which is 0.7% in comparison to minus 0.3%. So I think this is going to be reflected everywhere else in the world. It's going to be reflected in the US, UK, even Asia. We're going to see all of this just like falling one after the other, just like the domino, or the domino effect. And then we have the core PCE price index for the US, which is very important. Excludes, sorry, it excludes food and energy from this calculation. So it is expected to go slightly lower to 0.1% in comparison to 0.3% previous reading. And then we have the yearly number. The yearly number is 3.4% as of last reading. If it comes in anything above that, or like anything above 3.4%, we're going to see some serious bullishness in the USD. If not, it means that inflation is still moving down in a healthy, or not necessarily healthy, but um, in a controlled manner. Okay. Can you please help recap gold gap? Yeah, it's geopolitical, Mesa. We're going to get to the charts now, and we're going to talk about the gap, but it's mainly geopolitical because there was a pause between U.S. and Iran. I have no idea what they're doing. They have no idea what they're doing. So I think it's just like a relief because after this pause, we saw weakness on the dollar and strength on everything else. So I believe that's the main reason behind the gap. Because the market closed and the tensions were still on, and then a pause happened during the weekend. So now the market's priced in this pause or this relief, and gold jumped and opened at a gap because of that. Okay, and then we have the GDP, which is, I think, the most important number of Thursday. It's expected to grow actually. The previous is 2.1%. The forecast is 2.3%. So it is expected to go slightly higher. If that happens, that gives more room to for the Fed to raise rates or hike rates. If not, that means that increasing rates now is going to harm the growth of the economy. But if it actually comes in as expected or more, it means that it supports the hawkish scenario that we talked about minutes ago. Then finally, we have the initial jobless claims. The previous 187,000 jobless claims, which is the lowest in what, 57 years. This is the lowest reading since 1969. That's the previous reading. The forecast is expected to go back above 200,000 to 206,000 jobless claims. It's still relatively low, but which also, by the way, which also gives the Fed, or which supports the rate hike scenario, or which helps the uh, overall case for hiking rates. Okay, so that's the initial jobless claims, and then let's move finally to Friday. On Friday, we have the Bank of Japan interest rate decision. After hiking last time, they're expected to stay with, like, stay aside and do no change on interest rates. They're expected to stay at 1%. As the previous, no change. So CPI from euro is expected to go up slightly from 2.8% to 2.9%, which makes sense because of the reasons we already talked about, which is any drop that happened in June was mainly because of uh, due to the ceasefire and the memorandum of understanding between US and Iran. But now, July, all of that got reversed. So it only makes sense that we see inflation climb up again. Then we have the Chicago PMI. The previous is 56.7, which is pretty good. The forecast, anything above that or close to that, even if it's lower, that's still positive because it's expansionary. Any PMI number above 50 is considered expansionary, as we always say. So yeah, that's pretty much it for the economic calendar, guys. Do you have any questions before we move? Let's move to the charts. No questions? All right, so let me stop sharing this and let's move to the charts and see what's happening. Okay, we go to weekly. Okay, so yeah, like 1 second. Go to the charts, share. All right. All right, there it is. So let's take a look on how the weekly closed. It closed very bullish, actually, but it's still below this level, which is the 101.6, which is the pivot level or the 126-day moving average level. That's a very, very important level, although it closed very close to it, which in a very bullish way. So I'm expecting to see just like um, a slight correction, and then we continue going upwards. I think later this week, when Kevin Walsh goes up the stage and shows his intentions, whether it was hawkish or dovish, but I believe he's going to be uh, hawkish. Okay, so the monthly is still like it shows indecisiveness. This candle, this monthly candle that we're in, it shows indecisiveness. So if it closes anywhere around this area, even if it closes like this, it's still considered bullish. Okay. Then we go to the weekly. We already discussed that. It looks bullish, very, very bullish, but we wanted to close above 101.5 for the week and for the month because the end of this week actually coincides with the end of month. So we're going to have on Friday, we're going to have a weekly close and a monthly close at the same time, which is very important. Let's see what the daily is telling us. Okay, so on the daily, we're still trending upwards. Even the daily close on Friday was positive, but now we're seeing some negativity. I think we can still push down a little bit more, like maybe to around 101.0 or 101 flat. Or if it decides to go crazy, it might reach the 100.75, but nothing more than that, I believe. And that's for the daily. Let me check the 4 hours. Yeah, the 4 hours is already rejecting to the upside. If you can um, see the behavior here, like tried, got rejected, and now the current candle is showing rejection. So we might be done with this negativity that we saw in Asia, but it's worth keeping in mind that if it goes 20 more cents to the downside and everything else goes upwards, it doesn't mean that this is the um, actual, what's it called? The actual trend. Okay, that's just a correction. Um, then we have, okay, we are done with this. Let's move to Euro. This should give us an exact opposite reading. So let's take a look at the monthly. The monthly also looks the same. The current candle we're in is uh, shows indecisiveness. Okay, so the weekly closed last week closed somewhat, or not somewhat, actually very bearish, and this is just a correction. And I believe we're going to continue dropping, but it might be able to reach 1.4, 1.14, sorry, 60. They are expecting 82% chance of a rate hike. Let me check, Arif. 1 second. Let me check. Let me check. Okay, so there's a 31.5% chance this week to hike rates this week. On September, it's no. Um, Actually, it's 75%, and it's as follows: 55% to raise or to hike 25 basis points, and there's 20% chance to hike 50 basis points. I think 50 basis points is way too much, but like overall, it's 75%. This is as of now, as of this minute. On December, however, let's see. On December, it's almost guaranteed that they're going to hike. If they didn't hike previously, like on previous meetings, such as like September or something. 36, that's 72, 72. That's almost 90% chance they're going to hike in December. Okay. All right. Then that's the weekly, and then we move to the daily. Yeah, the daily is retesting the trend line, which makes sense. I think it's just a matter of time before it continues dropping to the downside. Let's take a look at GBP. Okay, so GBP last week got rejected from the trend line, and we are seeing obvious negativity on it. Okay. The monthly started somewhat bullish. Like if it closed near the highs, it would be a monthly engulfing candle, bullish engulfing. But look what happened here. Right close to the end of the month, it got rejected and is most likely or more likely going to close below this area. So that closes as a rejection, no positivity whatsoever in the cable or GBP USD. Okay, so then here we have the weekly bearish engulfing, so it only makes sense that we retest the 1.34 maybe, and then continue dropping. So guys, like what I see here is basically no change in our analysis. Our analysis has been consistent for the past, 3-4 months. We haven't changed a thing. Whatever we're seeing during our live streams is happening in the markets. So I hope you guys are actually making the most of this and you're making money out of this. But I don't remember that we had to change our mind week to week on anything. Like we've been saying that euro is dropping forever. We've been saying that dollar is going up forever. We've been saying that gold and silver are dropping forever, and that has been happening for the past, I don't know, 3-4 months. So that is consistent, and that's actually good for us to rely on our view because it's showing us that it works. Okay, that's that. Let me take a look at the Bitcoin because it should be bottoming very soon. We're still expecting to see this close to October, which is this. This is October 6th. We're expected to see Bitcoin bottom out around this area. So that's pretty much it on Bitcoin. Nothing much to look for. So it would look like something like a liquidity sweep. That's it. All right. Now let's move to everyone's favorite. Before we go there, let me check Nasdaq. Nasdaq is officially correcting on the daily time frame. Yeah. So we might still be going towards 27,000 area. We'll have to wait for that. The weekly. Okay. The weekly. Very bearish. Okay, so indices are bearish, which makes sense. Okay. S&P 500 is holding up, however. Like it's not as negative as the Nasdaq because the Nasdaq is tech heavy, and tech like got hit hard last week or the week before. after earnings. So that could be it. Let me check the Dow Jones. Dow Jones should be doing fine. It is doing fine. That's I think it's not going any lower than 51,500 anytime soon. And when I say soon, like I mean this week. Okay, finally, let's wrap it up with gold. So gold here on the daily. Let's first look at the monthly, as we did with everything else. Take a look here. Like, look how small this is. Like, I understand that many of you say that gold has been crazy this month, but it's been actually ranging because look at this small candle relatively to other candles. So this candle shows that uh, the price is somewhat charging either for a drop or a continuation to the upside, but I think it's more likely to go down than up based on our analysis. Let's go to the weekly. The weekly closed somewhat bearish. It couldn't close above 122, which is the which would have been an engulfing candle, a positive or a bullish engulfing candle. So we can go all the way like to sweep this around 160 and then continue dropping, but I doubt. Why do I doubt this? Because if you go to the daily, you see this. You see this engulfing candle, this negative or bearish engulfing candle. And we just retested the top of the range or the top of the bands or the top band, which usually means that the correction should be over somewhere around here with like an invalidation level of 170. So it shouldn't go anywhere above 170, but for now, I think it's going to continue downwards. Um, I know that headlines might trick you into thinking that, yeah, gold is recovering and it's going up. But that's just a correction. I want you to always remember what you just saw on the monthly chart while trading gold. It's just a very small candle relative to other candles. Okay, so it's just a correction, guys. It's just a correction for now. Like we still haven't seen if it's going to be a reversal or not, but uh, I'm going to stick with my bias. It's going down. And look, even on the 4 hours, it's getting rejected from very important levels, such as the 200-day moving average, one of the most important or most relied on indicators globally. So yeah, I believe that it's a matter of time before we see it continue to the downside. This actually could be it. This could be the correction. Let me see how much did it stop. Boom, 61.8. That's Fibonacci level. So there's a very big chance this is it. And we continue dropping from here. So I would be looking for sell setups around here. I'm not gonna lie, I sold around 101 because of this setup here, but make sure that you see your own setup before entering. And don't try to copy my trades because my stop losses are very big and my TPs are very, very far away. So I don't want you to get hurt, or because like, again, I'm trading a personal account, you are trading a funded account. So most of you, I'm talking, most of you are trading a funded account. So that would be easy to actually harm or breach if you follow the way I trade. So yeah, guys, that's it. That's it for this week. I hope it was helpful and clear. If you have any questions, you know where to find me. I'll be more than happy to answer any questions you might have. And for now, I would like to wish you a great trading week ahead. And as always, trade responsibly and trade in. Bye-bye.